All right, so Michael, you have a buy rating on the stock. You have a 466 price target. Consensus is 419. You're seeing a lot more upside than the rest of your peers. What's the catalyst for all this upside that you're seeing?
Well, like you said, it's been 8 quarters in a row of negative comps. Presumably, when they report later today, it'll be negative again. But all those negatives have been pretty consistent, right in the down 2 to 3% range. We think it'll actually be a little bit less negative today than it has been the last few quarters. To me, that's bouncing along the bottom, all while it's been a very difficult rate environment for them. So at some point, we think rates continue to come down. We think housing gets better, and that's going to be the catalyst. They've actually done a pretty good job during the last 2 years of being relatively consistent, again, in what's been a really tough environment for them.
Okay. They previously reduced their guidance. Now, this is interesting. They reduced their guidance, and I know you don't think they're going to reduce it again, but I would imagine when they reduced their guidance, they were under the assumption, like a lot of us, that mortgage rates would actually decline. I'm looking right now. Mortgage rates have actually gone up about 0.25%. So I don't think that's probably loosened up the housing market at all. Are you sure you're not going to see them lower guidance again? Because the housing market hasn't loosened up. Prices haven't gone down. Rates haven't gone down. Isn't that a key factor for them?
Sure, absolutely. And what we really think they'll do is probably narrow the guidance because they only have one more quarter left in the year, right? Just the fourth quarter. So we think they'll narrow it around the midpoint, really giving us the fourth quarter guidance. We think what happened is earlier in the year, if you go back 6-9 months ago, I think we did think that we'd have a little bit more of a recovery now. But when they reported last quarter, they pushed that out to the first half of next year. In other words, they think, we agree with them, same-store sales will turn positive at some point in 2025. Originally, we thought it might have been, or at least the company thought it might have been later this year. We think it'll probably be next year. That's what they're thinking now, and we don't think that will change at this point.
All right. So when we look at this quarter for Home Depot, what do you expect to do well? And is that a read-through to their rival Lowe's? And what does that tell us about consumer spending? I mean, where are people going to spend their money when they go to a home improvement store?
Sure. The pro business is doing better, probably for both Home Depot and Lowe's. For Home Depot, what's a little bit unique is their focus on the larger pro business. And that's something really that Lowe's has not gone after yet. Lowe's is going after more of a smaller pro customer. Home Depot does very well with that smaller pro customer already, and they have some market share there. So what Home Depot has done is shifted a little bit more to adding on this larger, what we call the complex pro. We think that's where we'll see some success from Home Depot.
All right. So the pro business where you expect to see growth, I'm just asking, I know you don't probably cover all these stocks, but when we talk about other housing-related stocks, how are they impacted by what you're expecting, or how do you think they might be impacted by what we're expecting from Home Depot? Like if I look at a Sherwin-Williams, are people not buying paint? When I look at a Whirlpool, are people buying big appliances? I mean, just through the lens of Home Depot, which I know that's what you cover.
Sure, yeah, we do track all those guys as sort of a read-through for Home Depot and Lowe's. None of them had great quarters, all mostly negative. Stanley Black & Decker, by the way, particularly negative. Besides them, though, the other ones are getting negative, but maybe less negative. We'd rather own the retailer, frankly, than the brands. The retailer yet is not restocking. We think at some point in 2025 they might start to restock again, but we're not really seeing that that right now. It's a very difficult environment for some of those brands.
All right, last question. Home Depot made a big acquisition this year, actually. They bought SRS Distribution. The idea is that they're targeting a quote-unquote $250 billion market. What's your view of that acquisition? Investors seem to like it. The stocks move higher, but what's your take?
Sure, yeah, that's that complex pro that I was talking about. Home Depot has pretty large share in the DIY business, of course, and the small pro. This is just the next layer of business that they're going after. It is the complex pro. By definition, it's a very hard business to go after. Home Depot has built the infrastructure to do that, but I think this acquisition gave them a little bit of a kickstart in that business.